Okay, so we are this close to what I think is going to be an historic global financial crisis, a crash like you've never seen before. So in this video, I'm going to tell you why I think that. I'm going to tell you what I am doing about it and what you should be doing as well right now. So let's talk about it. This is the Hey Ed YouTube channel. I am your host, moderator, and all-around nice guy, Edward Anderson. I'm not a financial advisor. Do not construe anything that I mention in any of my videos as financial advice. Always do your own research before doing anything with your money. Now, seriously, my friends, well, we are this close. This is not a joke. Now, I don't do a lot of market commentaries, at least not for quite a while, but now I really want to emphasize, what's going on here because you need to be prepared. Personally, my stress level is zero. Okay, zero. Okay, I am not worried about it. Matter of fact, I am hyped up. I am looking forward to it. But that's because I'm prepared, and I want you to be prepared too. So in this video, I'm going to share with you some insights and some wisdom that Wall Street traders use. And I'm going to show you why Wall Street traders always make money, whereas most people usually get devastated in down markets. So I'm going to reveal to you some inside baseball about how the markets work. Now, stock market crashes and global financial crises are not new. They happen on a fairly regular basis. I mean, all you have to do is do a Google search, for stock market crashes. You can check out all the crashes that happened in the course of history. You can see they happen on a fairly regular basis. And we've even had some recent ones, like in February of 2020, January 22, actually, the last one that they have quoted here was the one that happened in Japan here just yesterday. Okay, so I've talked to you before about the effect of black swans. Black swans are events that come out of the blue that no one was really expecting, and it creates a lot of havoc. Well, there are a lot of potential black swans out there, these days. And the one that kind of riled the markets over the weekend was the event that happened in Japan. Japan's Nikkei logged worst days since 1987 Black Monday crash. So what happened in Japan? Okay, like I've talked to you about before on this channel, so I give you a heads up about this issue before. Japan has a very serious issue with their currency, with their yen. And the traders in Japan put on a lot of money in what's called a carry trade. I won't go into the tall grass about what a carry trade is, right? But essentially what they're doing is they're borrowing a lot of money at 0%. And then using the money to go out and do other trading in other markets. But then Japan raised their interest rates, and now the cost of borrowing exploded. So these traders had to unwind their trades. And remember, now Japan is a $20 trillion market. And so Japan in one day was down over 12% in one day. So our markets saw what was happening in Japan, and we opened up down 1,000 points, yesterday. Now, in most cases, when you get severe market sell-off because of a black swan event, the black swan event itself is usually just an excuse to take profits or to do things that they know they should be doing. Now, there is a lot of talk right now that the Federal Reserve might be doing an emergency interest rate cut. A lot of people on Wall Street are calling for the Federal Reserve to do an emergency interest rate cut, to juice up the market. And this is one of my pet peeves about the stock market and about the government. The government has no business, putting their finger on the scale. They do that way too much. That's how we get bubbles, is that the government, they jerry-rig things. They supply sugar highs. They artificially support the markets, when if you let the markets, just act on their own initiative, things will be much better off. But the government feels like it has to always stick its nose into Wall Street's business. Now, personally, I think that if they do an emergency rate cut, it might have a little bit of a sugar high in the market temporarily, but then it's going to fail. Because if the market right now were to do an emergency interest rate cut, Wall Street is going to be saying, whoa, 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 what do you know that we don't know? Because, emergency interest rate cuts are usually reserved for, credit market, issues. And right now, at the moment, we have largely an equities, market issue. So the Federal Reserve is in a tight bind right now, right? If they don't do anything, the market is going to sell off, okay? But if Federal Reserve gets involved by, implementing an emergency interest rate cut, that could actually have the opposite effect than the intended effect. It could create a massive sell-off because the market is going to be spooked So keep your eyes out about whether the Federal Reserve, gets involved here with emergency interest rate cutting, and it might not have the effect that everyone would hope that it'll have. Well, we'll just have to wait and see what happens there. Another issue that's kind of disconcerting is that a lot of the brokerage firms out there, like Schwab and Vanguard and several others, they had technical issues. So people who wanted to get out of their stocks could not get out. And this is shades of 1987 when people called a broker, or they didn't have online trading back then, but they couldn't get the broker on the line. There are technical issues. So it's always funny when there are only technical issues logging into your brokerage account in a sell-off. There's never an issue when the market's going up. Only when the market is selling off, when there's panic selling. That's when they have, technical issues. But we have other, canaries in the coal mine right now that are kind of rearing their little ugly yellow heads. And that is these tech stocks. Now, the market has been on a tear now for way too long, largely only because of a handful of stocks, largely the tech stocks like Apple and Nvidia and Microsoft and Google and Amazon, otherwise known as the Magnificent Seven, right? So these markets have been going up largely because of the brand name tech stocks out there. But now they're starting to show weakness too. They're starting to issue disappointing earnings reports, and their reports now that people like Warren Buffett are dumping their stocks in a very big way. Not just Warren Buffett, by the way. I can promise you that most of your biggest, Wall Street types, they're either out of their positions or they are in the process of liquidating their positions right now. And you won't know about it until later. Now, pretty soon here, I'm going to get into exactly what I think the market is going to do, all the financial markets here in the very near future. I'm going to tell you exactly what I'm doing and what I think you should be doing. But before I do, I want to tell you my story. I want to give you my background because it is relevant. I want to tell you why I know what I know about the market and why I'm usually right in my predictions. I'm going to give you some inside baseball. I'm going to tell you some things here that I've learned along the way that Wall Street does not teach you. They don't want you to know what I'm about to tell you. So sit tight here, pause and get a cup of coffee if you want, settle in, because I'm going to tell you my story. It won't be very long, but I think it is useful for you to know, my background and how I got to know what I know about the markets. Okay, so I went to Cornell College and I triple majored in history, English, and ancient Greek. Yeah, I was liberal arts all the way. I did not have one economics class or one business class during my entire college education. Okay, so I was kind of an academic snob that way. I was a pretty smart guy. But my interests were learning about history and studying, the big minds throughout history, that kind of thing. Then I went to graduate school to earn my master's degree in classics. But after a year of that, I decided that, I was tired of being poor and I was tired of studying all the time. I was burnt out, academically. And I had the itch to travel because I had spent part of my college education studying in Italy, and I really wanted to travel and see the world. So I bought a one-way ticket to Japan, and I arrived in Japan with $200 in my pocket, didn't speak the language, didn't know anybody, didn't have a job lined up, ended up staying in Japan for 3 years. I loved it there. And then, as happens in life, I met a girl, and she's kind of career woman, and she had been planning to go to New York as a career move, long before I met her. And so I proposed to her at the airport, in Tokyo. And she said, okay, I'll marry you, but I'm still going to New York. So I had to go to New York too. So a couple months later, I ended up in New York. We got married the day after I arrived in New York. We got pregnant right away. So there I am. I'm a young man. I'm in New York. And all of a sudden, I have a family and I've got to start making money because now I have a family, to take care of. And so what does a young man do when he's in New York and he's got to make a lot of money? He goes to work on Wall Street. So I answered an ad in the paper for a stockbroker trainee, and I interviewed. I got the position. I studied for my Series 7, and I went to work as a stockbroker. And they started teaching me, about, stocks. Now, before this, I barely even knew what a stock was. Okay, that was my history. So they started teaching me, how to sell stocks. Now, stockbrokers are just glamorized salesmen. Okay, they don't know anything about anything when it comes to finances or the economy or picking stocks. They're just salesmen. Okay. So I started out at what's commonly known as a boiler room. And then I eventually worked my way up to a brand name, Wall Street, firm, blue chip firm. And they started, giving me stocks to sell. Now, when you're a stockbroker at a blue chip Wall Street firm, they tell you what to sell, right? You are given reports put together by $1 million analysts whose job is to find really good stock picks, and they put together really nice, elaborate, fancy reports. And then you call your clients and you read them the report, or you send them the little booklet on it, and you sell them whatever it is the Harvard analyst told you to sell. I mean, what am I going to do? Am I going to, argue with an Ivy League educated, analyst who's being paid millions of dollars just to produce nice reports? Well, what am I going to do? I'm just a little stockbroker. Well, it turns out these guys are morons. Now, it took me a few years to figure out they're morons, but you get these fancy reports, and I would sell these stocks or whatever product they're giving me to promote to my clients, and they kept losing money. And after a while, I tell you, it's tiresome. When your book gets burned every 3 or 4 months because they keep giving you bad ideas. And even though my clients, liked me and they didn't blame me, they can't keep losing money all the time. So I'd always have to be hustling to rebuild my book to bring in, new clients. And then the day came that changed my life. Okay, so I was at a bar one day after work at one of those, nice bars down on Wall Street that brokers, hang out in. And I overheard a couple of guys talking next to me, and I was listening on their conversation. And they were using language that I'd never heard before. Things like support levels and resistance levels and ascending triangles, and so I was enthralled. So I wormed my way into their conversation, and I kind of parroted some of their words just to make it sound like I knew what I was talking about. And I started learning things that I never knew before. As it turned out, these guys were traders. Now, traders are completely different animals from brokers. Okay. Now, as a broker, I got paid commission, right? So I got a commission every time I bought or sold a stock or whatever product, to my clients. Regardless of whether my clients actually made money, on that stock, I still got my commission. All right. So, so I wasn't incentivized to find profitable investment for my clients other than not losing them. Okay. But traders, they eat what they kill. Traders got a percentage of the profits they made on their trades. So traders, they had to make money. They had to find stocks that were going to, make money. So I started learning what those guys were doing. I started reading books. I made friends with some really good traders, and eventually I started to apply those trading principles to my, for my clients. So I started recommending stocks to my clients based on trading principles. And lo and behold, my clients started making money and my life changed. I didn't have to constantly hustle to rebuild my book because my clients were happy. They were making money. I was making money. It was a life-changing event. Now, right around this time, I moved back to Minnesota because the firm I was at, they had an office in Minnesota, and I didn't want my kids growing up in New York. I'm from Minnesota. I was raised in Minnesota. So I thought that'd be a better place to raise my kids. So I came back here and real quickly, I became the number one sales guy, the number one broker in my office because it's a smaller branch. I had a window office. I had all all the perks, but I was really itching to trade more for myself. And so I went to what's called a sold shop. I won't get into that's a whole different story to trade my own account. And I went there, and my buddy at the sold shop, he said, "But well, Ed, I'm thinking about opening up the shop to the public, and I need someone to teach them how to trade." And I told him, "Well, look, I don't want to, I want to trade myself. I don't." But he offered me a cut of the business, in effect, and so I agreed. So I designed. Now this is in 1999. So I designed one of the very first trading classes available to the public in the country, right here in Minnesota. And so I designed my trading class from scratch. And over the course of a few years, I refined that course from 2 weeks down to 2 hours. I can teach someone how to trade now in 2 hours because I learned what people really need to know, what they don't need to know. I kind of cut to the chase. So I spent several years teaching the average person how to trade. So there is okay. I do my own trading when I had time, and I could show other people, how to trade. Okay, so the story's getting a little long here, so let me cut to the chase here, okay? Let me tell you a few little nuggets of wisdom here that no one else is going to tell you about how to make money in the markets. Let's start with lesson number one. Okay, when you are trading, whether it's stocks, commodities, cryptos, doesn't matter. You're not trading any of those. You're trading people, okay? Because all markets are made up of human beings. And that's why the stock market and all markets are never going to be rational, because they're made up of human beings. And human beings are emotional creatures, okay? There are three emotions that drive the markets: fear, complacency, and greed. And of those three emotions, the dominant emotion is fear. Statistically speaking, stocks go down 4 times faster than they go up, because fear is by far the most dominant, emotion. So, and this is where technical analysis comes in. This is why it's important for you to learn how to read charts, okay? Because all charts are is what I would call a pictogram of human emotion. You can see where the fear is, where the complacency is, where the greed is. You can see it. So if you learn how to read the charts, you can learn how to see human emotion, on the screen. And this is true in all time frames, whether you're a day trader, a swing trader, or a long-term investor. Okay, these charts always work. If you were to go back to ancient Egypt and chart the price of wheat back then, and you put it into a chart, the patterns would have the exact same meaning and predictive abilities as they do today. That's because human emotions never change. They never have changed. They never will change. So learn how to read charts. That's why for me, the fundamental issues are secondary issues, okay? What's far more important is what's going on in the charts. So when you hear me talking about fundamental issues, okay, they're issues that I want you to know as background noise, all right? They're kind of like a heads up, like clues. But in the end, you take that information and you apply it to a chart for confirmation to see whether it's playing out the way you think it's going to play out. Now listen, remember, I started in the business in October of 1987, literally 2 days before a major stock market crash. You've heard of Black Monday? Well, that's when I started in the business, 2 days before a massive historic stock market crash. That's when I started, in the business. And since then, I have lived through multiple crashes. So I know how things work. This is not my first walk around the block. Okay, so now we've got my story behind me and I kind of laid the groundwork for you. Let's get into what's going on in the markets right now and what I think is gonna happen. Now, keep in mind now that these days, these chart patterns play out a lot faster than they used to, largely because of computerized trading. Most trades done these days are computerized. The computers do them. That's why they react so much faster. Now you're saying, well, Ed, I thought you said markets are made up of human beings. Well, listen, these computer programs, they're written by people. And these people, they write the algorithm, they write the programs based on the chart patterns that are the same patterns that have been used by traders, forever. Okay. So support levels mean the same thing. They just put it into the computer program. So the program says, when this support level is taken out, this is what's going to happen based on history. So the computer recognizes that, and then it just sells. But it happens so much faster these days because computers are faster. And that's one of the reasons why the upcoming pending crash could be so much more dramatic than we've ever seen before. All right, so let's take a look at a few charts, and I'll tell you what I think is happening. Okay, now I prepared these slides last night, on August 5th. And right now, as I'm recording this, it's halfway through August 6th. Okay, so this is a little bit of old news chart. This is a 1 month chart of the market because I wanted to blow it up to show you what's been happening over the past few trading days. Now you can see that very recently, the market put in an all-time high. It's essentially a double top that's going on here. And this support level right here, that's a very important support level. You can see that it blew right through that support level and got down to this 38,500 level. So the manner in which a support level is taken out is very important. Not just the fact that it is taken out, but the manner in which it was taken out. Okay, but let's take a look at a little longer term chart. Okay, so this is the 1 year chart, okay? And this is where the potential damage really starts showing itself. At the very top here on the right here, you can see that double top that I just talked to you about, and I put a circle around there to kind of emphasize that we're at least a short, in a near term all-time high, a record bubble high in this market. And it blew through this support level and this resistance level. Now, the next important level, technically speaking, is the 38,000 level. After that's taken out, the next support level is down here around 32,005. Let's look at the 2-year chart. And the 2-year chart, okay, the next major support level on the 2-year chart is down around the 29,000 level. Okay, so listen, we're looking at long-term charts here, right? The 1 month, the 1 year, the 2 year. These levels are typically not taken out right away. It takes a while for these events to happen. Okay, these are just kind of lines in the sand you want to keep an eye on. And there's no law that says they have to be taken out. I'm just telling you that if and when they're taken out, the next major support levels are here and there. I'm just trying to paint a picture for you to give an idea of the potential movements in this market. I mean, the market right now is at a record high. Things are frothy. In my other videos, I give you a litany of reasons why this market is showing signs of getting tired. The market is where it is right now, largely through manipulation. Okay, we have a corrupt government, and we have corrupt Wall Street types like the Federal Reserve and the Treasury Department who have been juicing this market. Now, when you take steroids, I never have, by the way, but if you take steroids, you might see some short-term gain. But over the long run, if you keep taking steroids, you're gonna have a big price to pay. So these bubbles always go on longer than they should because of basically interference by the powers to be, by your government types and by your Wall Street types. But at some point, they do pay a price. They do pay the piper. And I think that's what Warren Buffett is saying right now. That's why he's dumping his stocks. Okay, so what do I think is going to happen here? All right, we are this close to a major downsize event. Now, that might be caused by a catalyst. Maybe something goes on with Iran. Maybe something happens during the presidential election. Maybe the derivatives market starts to blow up. I mean, take your pick. There's anything that could act as a catalyst to the next big market sell-off. But the way it's not going to work is you're not going to see the market go down 7,000 points in a day. It's not going to go down to that 2-year low in one day. Okay, that's not the way it's going to work. Okay, you always get movements along the way. You get bounces and you get rallies. Now since we just had basically a 3-day massive sell-off, last night I was telling people that I know that I was expecting a bounce in the market. Let's take a look at what the market is doing today at the moment. Now, again, I'm halfway through the day here, on Tuesday. Okay, so here we are, the 1 month chart on the Dow Jones Industrial. And you see today, the market is having a bounce. It's up 482 points, so almost 500 points. Well, duh, I'm looking at this, well, of course it is. The market is doing what it always does. After a nasty sell-off, it has a bounce. This is what markets do, and this is where people start making mistakes. People say, oh, people are feeling relieved today. People are saying, oh, thank God, the market is rallying today. Well, listen, if you throw anything on the ground hard enough, if you throw a brick on the ground hard enough, it's going to bounce. That's what happens. Now, what you do in cases like this is you always judge the health of a stock or the markets or a crypto by the quality of their bounces. So we need a little time here to see how much of a bounce this ends up being. So this is what I think is going to happen here. We're going to have a little period of time here where the market is going to try to defend the recent low it just put in yesterday. It's going to try to defend it. So what I expect to happen here is we're going to see some kind of bounce here. It might go on for a couple of days or whatever. Then we're probably going to enter a very choppy period, and then it's going to roll over and go south again. The real important level to watch right now is the low that the market put in yesterday. Now, again, I'm talking big picture here, okay? It might be until after the election when we get the big sell-off. But if you think the sell-off that we've had the past few trading days is ugly, you haven't seen anything yet. We've seen just the beginning. my personal opinion, okay, is that we are in for a crash. Now, the crash might not be as dramatic as a one-day event. It might take it might play itself out over the course of a few weeks or a few months. But at the very least, I'm not in a hurry to go long stocks in here. Sometimes the best trade you do is no trade. Sometimes the best thing to do is just go to cash and just sit back and let the carnage happen. And it might be a while. It might be a couple of years before the next big gee whiz entry point comes in. Now, there are ways to make money in a down market, in a bear market. I won't talk about that here because, again, the video is already getting too long. And I don't want this channel to become a trading channel, but it's okay to put your money to cash for a while. A penny saved is a penny earned. The whole saying, right? It's okay to be defensive for a while. And the degree to which you want to trade bounces or whatever, I'll leave that to you to decide, how aggressive you are as a trader. I'll tell you this though. One of the things that I learned as a trader is that buying and holding is not a strategy. This is one of my pet peeves out there. The idea being that, oh, well, this thing was trading at $100 last week. Now I can get it for $80. It's a great buy. I'm going to buy it because I know eventually, that drives me nuts. I mean, look, I get it. Most people don't have the time to trade, or you don't have the skills to trade. You don't have the wherewithal to trade. I get it. But you can still apply some very simple principles to your investments, okay? Now, one of the lessons that I try to pound into my traders is that when you're trading, picking the right stock or the right crypto is useful. Okay, God knows, it's good to have good stock picking and crypto picking, abilities. But what's far more important is what your plan is. What is your plan? Now, I will tell you, this is what I do, and I drill it. I used to drill it into all of my students' heads, and I strongly encourage you to adopt the same thing. So when I get into a trade or an investment, it doesn't matter, okay? The last thing I ask myself is, where is my stop? Typically, I look at the chart and I look for the most recent support level as my stop. And I say to myself, okay, well, if I buy it here and I get stopped out, I'm going to lose this much. Can I live with that? If the answer is no, I either don't do the trade or I wait for a pullback, or I'm going to adjust the number of shares I'm going to buy, whatever. I have it make sense to me. So the last question I ask to myself is, if I get stopped out from here, can I live with that loss? And that's probably the single biggest reason why I've survived where most other traders have failed. They've gone bust. Is I never give the market a chance to kill me. Okay, keep your losses small. There's a saying in the trading industry, right? The first loss you take is the best loss you take, right? Keep your losses small. So the formula is keep your losses small and let your winners run. If you're going to be in the financial markets, of all things I cannot guarantee you, the one thing I can guarantee you is you're going to have losses. You're going to have trades and you're going to lose money on. Just get over it. If you can't live with that, I don't know what to tell you. But it's a necessary skill that you need to adopt and incorporate if you're going to be a successful trader or investor for that matter. Keep your losses small and let your winners run. Now, occasionally, I will tell you what I am buying or selling or whatever. These days, it's mostly in cryptos. I actually do not do a whole lot of trading these days because I outsource my trading to programs that I believe in, programs that I've vetted, programs like Daisy and like EasyBot. And by the way, in a recent video, I told you that I was out of everything. I only have one crypto left, and that is Super Trump, and that's true. I do have Super Trump. Now that I do consider a special situation in my case. I actually bought more of it the other day, and that's paying off really well for me. But that's a special situation. But the only cryptos I have right now are my Super Trump and my USDT, which is crypto form of cash, right? And the cryptos that I have in my EasyBot. I forgot to mention my EasyBot because I never really look at my EasyBot. EasyBot is a software program and I've done videos on EasyBot. I'll try to put a link in the description below to the videos I did on EasyBot. And that's a software program where the gentleman who designed it, and in my video, we did a long interview about how he put together the EasyBot program. And it's a software program where you can match it up with your own crypto exchange, so you don't have to send them any money, right? You're just attaching that software to your crypto exchange. You tell them which cryptos you want them to trade for you, and it'll trade for you based on the algorithm. And it's designed to work in a bear market as well as a bull market. I looked into it very deeply. So I am in EasyBot. So I do have those cryptos, but I forgot about it because I don't really ever look. It's on automatic. I just let it trade for me, and it's doing really, really well. So I just so if you want to look into EasyBot, I would suggest you at least look at it. Again, I'll link in the description below for you to watch the video. And if you want to sign up, I do have a referral link if you want to use that, to use EasyBot. So let me just wrap it up by saying, listen, I think that we are at the beginning of what potentially could be an historic market sell-off. And I can't tell you exactly the day it's going to happen. And this might be a slow-moving car crash. It might, it might go down, in increments. Bottom line is, I'm not bullish on this market. And occasionally, I might share with you some crypto that I'm buying, opportunistically or whatever. But again, remember, I don't have my license anymore. I let it expire. So I'm not a financial advisor. Okay, I'm just another guy on YouTube sharing ideas. I mean, trust me, I don't do these videos, for the money. I mean, I've got a modest-sized channel, and I'm very grateful to all of my subscribers. Thank you all so much for being subscribers, to my channel. But I don't, I'm not a massive channel. I don't know how to promote. I'm not a professional YouTuber. I don't know how to promote my channel. And honest to God, I make about $100 every 3 or 4 months, off my, YouTube channel. So I don't do this for the money. I'm, essentially retired, and I view this channel as a way to kind of, share the knowledge and the wisdom that I've acquired over the years, just for the benefit of mankind, I guess, so to speak. And I hope that some of you get something out of it. I do have a WhatsApp group. If you'd like to join the Hey Ed WhatsApp group, shoot me an email and I'll send you the link for the WhatsApp group. Please like, subscribe, and share. Ed Anderson, live from Minnesota, signing out.
Copy that.